This is the Uptick Newswire Stock Day podcast, sponsored by InvestorsHangout.com. Subscribe to us on iTunes, Google Play, and YouTube to stay up to date on penny stock news and interviews, public information on OTC, pink sheets, and microcap stocks from around the world, with your host, Everett Jolly.
On today's show, I'm bringing you a brand new company. I'll tell you what, I'm super excited to have them on the show. They came on my radar about 6 months ago, and my team has been reaching out to them ever since to try to get them on the show. We're talking about MamaMancini's Holdings, Inc. company. They trade on the OTCQB. You can find them under the ticker symbol MMMB. And we are so lucky and fortunate to have the CEO of the company, Mr. Carl Wolf. Carl, welcome to the show.
Thank you very much. Glad to be here.
You know, give my listeners a little bit of a backstory and about statement of who you guys are, and then I want to get into the Q&A.
Okay, great. We're a company that manufactures and markets perishable foods that are sold in the perimeter of supermarkets in the deli, prepared food section, take-home, ready meals, hot bars, sandwich shops in supermarkets. And we've grown from just meatballs to meatloaf, chicken parmesan. We sell stuffed peppers. We're now introducing sausage and peppers and a number of other items. So our line has expanded very rapidly. We're in around 45,000 spots on supermarket shelves. We're all natural, made with minimal ingredients, and of course taste great. Taste panels show that intent to buy again is over 92%, and we're very happy with that.
Do you have any major events maybe going to happen here or occur in the next 3 to 6 months?
Well, we have received a number of authorizations from major national chains, including Walmart, Sam's, Costco, Albertsons, Safeway, HEB in Texas, Hannaford, which is part of Ahold, the big chain, for new items, and they will start being distributed coming in September, going through November, and we, if all goes well, we should move from around the 45,000 locations to 75,000 in the next several months, with appropriate increase in sales.
You know what I really like about your company and why it came on my radar? I'm always looking for companies that are growing their revenues. And correct me if my metrics are wrong. You guys did $7.7 million last quarter, over 5.4 the year before that. If you take that times 4, you got a run rate probably around to 28 million to 30 million. Your market cap's only $24 million. Don't you feel that your company is undervalued here?
Well, what CEO doesn't believe their company's undervalued? The peers in our industry are anywhere from 2.2 to 3.5 times sales.
Right.
Perhaps a better metric is EBITDA, and companies are valuation of around 20 to 25 times EBITDA. And if we do what we think, we could reach an EBITDA of 7 to 8 million run rate by the end of the year. So that would be a very substantial valuation.
You know, Amazon's a beast in this market. Has that, with the acquisition of Whole Foods, does that affect your business?
It's a very positive effect in that Amazon is focusing on higher quality and take-home food, prepared foods. So the other chains, in order to compete with Amazon, are increasing their quality and availability of products. And our products are all natural, and so it's our type of products that they're very interested. So we have shown a very significant interest. We do sell a number of Whole Foods divisions right now, our products.
You know, I want my listeners to listen up. I brought you a lot of great companies over the years, and this is no exception to the rule. This is a great company with great management. Let me give my listeners some metrics. First of all, the stock is undervalued at 72 cents. Fair value for me, the stock should be around $1.60, $1.70. That's my opinion. Then I look at management. And when I look at Carl Wolf, you know, he spent time with Nabisco. just a little company there. He also spent time with Alpine Lace Brands. You bring a lot of experience to this company, and I say that in a way that, where do we go from here? I mean, obviously your stock's undervalued at 72 cents.
Right. Well, we're we have a master plan. We've increased our production capacity to handle about a 70-80 million run rate if the mix is correct. At that point, we should be earning somewhere around 17 to 20% EBITDA. Overall, incremental EBITDA is around 25% on incremental sales. So if we can get the volume up to that point, you're talking 15, 20 million in EBITDA. And then we think as the business evolves into more products, more chains, into food service, into components of other products, into Canada, Mexico, the Caribbean to begin with, we think we very easily could be a $300 million company over a period of years and making 60 plus $70 million EBITDA, which if you apply the metric of 20 plus times valuations for our type company is worth a lot of money. Obviously, so 22 million valuation today is very low compared to 20 times 60 million. So,
Carl, what I'm hearing is a lot of growth in the future. What worries me just a tad bit, are you going to need to raise any additional equity to finance this growth?
From what we see, no. Our cash flow, we believe, will be able to pay off a senior note, which we're paying down through, we've extended that note to a maturity date of May, and we have a working capital loan, and we think we'll be able to pay down actually a number of loans over the next 6 months, and we believe we can finance the next phase of plant expansion, which probably will be a $3 to $5 million total, of which we could probably finance at least half. So we think we have more than enough cash flow.
Absolutely. When you get to where you guys are at, sometimes to take it to the next level, there's a little bit of a disconnect with capacity to handle more business. Do you see that as a problem?
Well, right now, as I said, we can handle up to about, we just completed a plant expansion. We can handle 70, 80 million if the mix is correct. A lot of it will depend on the mix of products. And then the big push in business comes in the fall months. That's when the supermarkets give you authorizations during the year, but they first take distributions between September and November. So we'll have to make a decision around December as to increases in capacity, depending on what we think will happen. So we think we can handle that pretty well. I do want to mention that typically the second quarter, which we just ended, is typically lower and slower than the first quarter. Last year was an anomaly. We've absorbed that pretty well. And then, we see a tremendous increase in volume going forward for the third and fourth quarter.
Carl Wolf is my guest today. He's the CEO of MamaMancini's Holdings. They trade on the OTCQB. You can find them under the ticker symbol MMMB. In closing, Carl, what can my listeners take away from this interview, and why should they go out and buy your stock?
The peer valuations are substantially higher with much lower sales growth and much lower our operating profits on a normalized basis, on an ongoing basis, are very high. It's a very valuable company. Our gross margins are very high. So this means we're a very attractive business. And we're in Italian foods, which is loved all over the world, and great products. So right now, the key to the business for us is to work it. We haven't done a lot of investor relations because we just want to prove, make it work and get those orders and make sure they're handled properly and keep growing it. We also do a number of marketing and advertising. It isn't just that it goes out there, which helps a lot. The other thing is eventually we should be uplisting to NASDAQ. which we think will create a much higher valuation for the company as well.
You've been listening to the great Carl Wolf. Carl, I want to thank you for coming on my show. It is a great pleasure to have you on here. The only thing I ask is that you come back on my show 50 days, give my listeners an update. I wish you nothing but continued success.
Thank you, Everett. Take care.
This program is entirely sponsored and produced by Uptick Newswire, LLC, which is responsible for the content. The opinions and information provided on this program are those of the guests and those of the respective companies they represent, and do not necessarily reflect those of the staff or management of Uptick Newswire. Uptick Newswire encourages all listeners of this program to do their due diligence and research when determining investment strategies that will work for them, or to seek the assistance of an investment professional. The guests of this program may have paid for its distribution and are not directly affiliated with Uptick Newswire or this station.